Good morning. My name is Taylor, and this is the Hack and Company at Remax River City Real Estate team. Some gentlemen here this morning to talk about real estate, really, because the Realtors Association of Edmonton has dropped the stats package and it's boring. It sucks. Reading statistics is not for everyone. It doesn't make some light reading. There's not even a good place to keep it. Like people don't store this stuff in the bathroom like they used to. So we read it, so you don't have to. But more so, there's probably some disparity on what people are seeing and what is actually happening in the market. Like I had somebody that I was talking to this week, and they were saying that, man, I interviewed three realtors, and these two other realtors are telling me that there is no inventory, and you are telling me that there is inventory. And I'm like, yeah, this property is in a price range that isn't hot. Over $1 million right now? There's like 12 months of inventory in Edmonton. That's not hot. So see how we can measure things and we can lay it out. That's what we talk about in the office, as well as just some of the shit that happens in real estate and why we wanted to share. Jeff, how you doing this morning?
I'm doing great.
Jeff Rosmahal, you have been hanging out in some interesting places in the last little while because you're popping around trying to find different properties in some of the hotter parts of the market. Now, traditionally, townhouses have been total dogs, right? Like this time last year, Tony, didn't you have a townhouse listing that was like kind of not what we're seeing today? It took a month or so to sell, you know? And the seller wasn't confident, but now they're confident. What are you seeing out there, Jeff?
Complete shift.
Mm.
Like you said, we're watching townhouses now start to get to that spot where if it's on the market, we're looking at if 10 come on, most likely a lot of them are going to go.
More
So
than 10 in that market. That market's so crazy. Like sale to new listing ratio is what Jeff's talking about. How many show up and how many leave the market. And for Rowan Townhouse, well, that was 10 out of, it was actually 12 out of 10. It's the best we've ever seen it in that market. I'm going to say in a decade. I'm looking at stats right in front of me that are from the last 5 years. So how many of those have you shown in like the last, I don't know, 3 or 4 weeks?
numbers wise, I have shown about 20. That's the
Okay, how
thing.
many of those are still for sale today?
That's the thing. That's the big stat. And I'm going to say 75% of those left.
Yeah, and that's just because it's time. Like some of them are new and just about to leave. But that's one of the things that we're finding really interesting. Ryan, also good to see you this morning.
Hey, good morning, Taylor. How you doing?
I'm doing pretty good. You have had a smoking December leading into January. Actually, in January, just great start so far. Most people in our industry see January as not a very exciting year or part of our year. And I think that you've helped four families buy and sell so far.
Yeah, off to a good start. It's crazy. I mean, the start of this year is definitely still a lot of opportunity, even given the low inventory. And I think a big part of why I've been able to be successful so far is just having these good conversations with people early on and just being ready for, the frequency of opportunity that's going to be available and just be willing to go and having them be flexible with their schedules and just kind of get in the door on day one when
I love how
something
you're service oriented and you're kind of looking at this as like a project to be completed. That's a really good way to look at it because there's many people that just are not prepared for what's happening right now. Like when you try to explain that in parts of our market as a buyer, everything you look at is going to sell over the price that's on the sticker. Okay, all of them. That's really like tough to take for buyers. But when we talk about like the experience, like Tony, you've been an agent for quite a while. Anthony D'Souza, good morning. How are you doing?
Doing pretty
You've been
good.
an agent for years. And in January, normally there isn't a lot of people that say they want to buy houses.
Typically not.
And then it kind of happens like April, May, June, is everybody says they want to buy houses, right?
That's right.
But isn't that what we are feeling right now?
It really does feel like there's a ton of buyers just waiting on the sidelines, waiting for new properties to get listed. They're like, put me in, coach. I'm ready.
And we're seeing them. Like this week, you were in a multiple offer that surprised you. Can you tell us about it? Where was that?
Yeah, it was in Glen Allen in Sherwood Park. You know, 1970s bungalow, really good size, nice double attached garage. It was on one of the main collector roads for that neighborhood. So, some people might not have really cared for that as much, but it had been nicely updated, lots of upgrades, really didn't need anything. And when I was looking at this place listed for about 525, the comparables were showing like, mid 500s, like 550 or so. And our offer was definitely over that. And we had some really good things, good form there. But when I was talking to our buyers, like I was thinking, I could really see this going over six. Like there's not a lot for sale right now. This is really nice. There seems to be lots of interest. We ended up having over 10 offers and it did sell over six. And it was an unconditional offer that we were up against. So buyers are out there. They're looking for stuff that's been nicely renovated and in a desirable place like Sherwood Park. So it's been interesting to see. But yeah, we're definitely seeing some new records hitting those books.
Okay, I got a theory on this, and I want to see if this tracks with you guys. People that have amazing houses don't really want to move. And when they're not seeing markets that are really pacing upwards, they don't. Like the last generation, they had like a rule of thumb when it came to this. And they said if your property is worth more than tax assessment, that's the litmus test. That's when you should sell. And if it's worth less than tax assessment, then you should not sell. I hear some people in the market that say, oh, you should never sell for less than tax assessment. And that's right. You should not participate in the market as a seller if last June, when the tax assessor called it, and they call it like this, um, but if they called it, then it should be more than it is now, right? More than that number now. And that's what we're seeing is this stuff is really moving upward. But when you talk about the neighborhood of Glen Allen, most people do not associate that with $600,000. When you're talking about the neighborhood of Glen Allen, I think that there'd be a few people that would be surprised, except for maybe those infill properties, those like new builds that are on the corner of Baseline. Those properties are kind of 800-ish upward from there. But aside from that, they're really seeing stuff over 500 in Glen Allen was surprising. And I think that if we talked to you maybe a few years ago, that place you just saw would have sold for 500. How many years ago would that have been? Where you would have been like, oh, I think this probably would have been five.
Well, I helped a teammate's family member buy something similar in a similar neighborhood, and it was just over five. It was quite a bit bigger, so I'm thinking that this one, you're probably right, is closer to five, and that probably would have been about 3 years ago.
So $100,000, 25% upward in less than 2 years. Real estate traditionally is like a 5 to 7% a year if you're in a fairly healthy market. If you've been in the Edmonton market, if you've been in the greater Edmonton area in Alberta, it was awful for almost a decade. Calgary didn't make it that long. It's been moving upward. But here, like the story is just taking off. I'm going to walk through it and then we can kind of take breaks where you guys want to break it down. But when we take a look at the measurement of the market, supply and demand market, flat out, it's a seller's market. It is a clear seller's market. Sellers have the advantage in almost all the property segments. They have the advantage in townhouses, duplexes, detached property. Apartment style condos is where you can kind of see some even footing. And if you are shopping in luxury, buy something because as soon as the rest of the market catches traction, luxury is going to shoot up. I have several clients that I'm trying to hold back from the market because when you go to the top of the market and the market goes up, man, that sways the most. That moves the most. It picks up so much money that and that market is cool right now. So you can get great deals in the luxury market, but I'm going to say that that's a limited time offer. And how do we know that? Well, normally this time of year is a seller's advantage, or sorry, is a buyer's advantage. This time of year, the number of sellers in the market outnumber the number of buyers in the market. But we're in this like low inventory situation. So say there's low or no inventory. One, ask them if that's specific to you. I was just in this listing interviewing with three other agents. The listing's like over $1 million. The other agents, I would consider great agents. You know what they were telling the client? They were telling them the average days on market only for the stuff that's sold. They were talking about average days on market for 12 winners among 261 attempters. 261 trying to win and only 11 win. And that's the numbers you're talking about. That wasn't the experience for the majority of people. So, yes, if you sell, you could get that. But if there's only one buyer for 10 or 11 sellers in the marketplace, you probably don't want to be the seller that got the buyer because they had to do some dirty, nasty things to get that buyer. And most of it was say goodbye to some of that money that they would have collected if they would have waited for more of a balanced market. So if you're selling luxury right now, last April or May, we saw like a much better experience in selling. It's too early, but if you're shopping for that stuff, come on in. Let's go lay a ground pounding there. Um, where would you say the battle is the tightest? Where would you say that if you were a buyer coming into this part of the market, bring a helmet?
Townhouses and duplexes are really tough.
Holy
I can
goodness,
attest to
are
that.
they? Yeah, yeah. Yeah, you
That's
can see these guys. They've been there. They've been helping people in those markets, and you are going to have to compete for a property for sure. And if there is no competition, beware. There's some overpriced junk in the market here right now. They're looking for you. They're looking for people that just saw a hot sell next door and don't realize that this is not. You have to have some perspective to evaluate property, but we're seeing it. So just think right now that 25% of the inventory we should have are gone. If you don't like the three options that you got in looking for a house, that's because the fourth one just isn't available based on inventory overall. And the other thing that we're seeing is a lot of talk about, our listings down. Listings are not down. New listings are just on pace for the last 5 years. In fact, there were more detached listings, new listings in December than what was normal for the last 5 years. It was pretty much on par for duplexes. For row, it was up. That place where 12 of them sell for every 10 that shows up, those townhouses, yeah, there was more listings there. And that's because demand calls supply to the market. When people hear, oh my goodness, I sold for this and I had this many offers, yeah, that gets them excited. It pulls them in. And apartment style condos still bring in the inventory, but at least it's normal now. At least they're not bringing record inventory. So we're expecting that part of the market to even out. But where is up? Well, sales are up. Like more people are buying definitely those row and townhouses. Like when you consider what was normal, we're up 25% in the number of sales. And that's such an itty bitty segment, right? Like when we talk about detached properties each year or each month, we're normally talking about thousands, like over 1,000 properties. But when we're talking about these row and townhouse, like normal is 160 new listings for the entire greater Edmonton area in a month. Very small segment. So that's going to really push people downward as that parts of the market rises. And how do we know it's rising? Well, sale to list price ratio says that right now, if you're buying a house, the deal is 1%. You can get 1% off a house normally if it gets to average days on market without finding another buyer, right? That's the same thing for semi-detached duplexes and townhouses. So almost everybody in the market has these expectations related to the activity and looks like the market is meeting them. Is there anywhere that you're seeing some disparity there? Who's been in apartment style condo land lately? What'd you see, Jeff?
definitely, like you said, we're looking at balanced. I'm looking at a lot of stuff coming on the market, but I'm also seeing a disparity when it comes to when these listings come to the market. Some of them are priced well and some are not. And you definitely see that, you'll definitely find that with days on market. Even if it's a great spot, if it's not priced well, the market reacts.
Absolutely. And in apartment style condos, the playing ground is a lot more even. Like I am pending on an apartment style condo listing, and we do not have near the confidence we do. I'm also listing agent on a townhouse that's on opening weekend. If you would have rewinded like by a couple of years, the amount of showing requests that we would have got probably would have been like a good opening weekend, maybe 3 or 4 showings. And then you get into this pace of 1 or 2 a week. 14 showing requests, I think by like 3 o'clock yesterday afternoon. And yesterday was opening day. It is spicy, right? It is going up. And average price is forcing people to kind of make some decisions. Would you say that's the hardest conversations you're having right now? Is around pricing for buyers?
Yeah, buyers are definitely having a hard time looking at what they've seen online for the last couple of months. I think
Mm.
like when we're showing them what's actually out there right now,
Hmm.
like this one family, they would love to buy in Sherwood Park, but for what their budget is and what they want, there isn't anything, and we don't think there's going to be anything in Sherwood Park, for a nice detached house under 400. So we're having to pivot them to like Northeast Edmonton, Southeast Edmonton, so that they're still relatively close for work, but they can actually get something that they want that doesn't need a ton of work.
And that's because average price is looking like this. So do you guys see what I see? Is that the average price graph?
Absolutely. And it's going.
Perfect. I just wanted to
Train
make
wreck
sure I
extension.
wasn't sharing my screensaver or, you guys weren't lost in space. But so average price, like when you take a look at that orange line, as we now have complete stats for 2024, we can see that all of their reference points are probably from here. This is where they think what you pay is what you get. But now here where we are, that's not the case anymore. And this is not a limited time. This is not just like a hiccup in the market or when they raise gas prices going into a long weekend. What we're seeing is the years that we missed out on appreciation are coming all at once. Those years where we should have got like a 5 or a 7% bump, man, they're coming. And breaking down into segments here, this is detached houses. So again, look at the disparity between that orange line and the rest of the pack. When we get into semi-detached, this is the duplexes. So here's where we get into the smaller segments of our market. So detached, lots of detached in Edmonton. Semi-detached, not very much. And that market is now super hot. And that means that some of the people that were buying there had to make hard decisions. The hard decisions that they had to make is that they can't buy this anymore and they got to look at something maybe that's a row or townhouse. It's not a duplex anymore. Sometimes this means that they're moving into product that has condo fees. And look at that. This part of the market, see how that distance shows how hot it is? And then finally, average sale price for apartment style condos right in the mix. So what do we think is going to heat up next? Obviously here. And that's
Apartment style
because
condos.
we saw that from like this green line 2023 was just this slow gradual uptick. And then 2024, it's during the start of the year where we start to see the most trend change. It gets to that skinny part of inventory, and then if it's going to be different, it's going to be different. So last year we kind of had this roller coaster for apartment style condos with average price as the market absorbed inventory. And what we're looking for is to see this start leaving the statistical past. That's what we really want to see for apartment style condos and what we expect to see as we get a little bit further into 2025. Is there anything else that you guys expect to see as we go through the market this year?
I think there's still going to be some talk about interest rates, and people relocating to Alberta is still probably going to be on top of mind for a lot of people.
Yeah, I definitely think that we're going to continue to see like right now it looks like our federal government is kind of frozen. So anyone who is waiting for change somewhere else, change is not coming anytime soon. So they're going to continue coming to Alberta. That's for sure. And Calgary is really priced out now. Like the average price in Calgary, and they're starting to heat up again. I'm also hearing that they're hopeful about some heat in Vancouver and Toronto, but I don't know that it's more than hope now.
I feel like still a lot of people, just with rents, the pressures of rent going up. I mean, a lot of people who were kind of thinking about it were still trapped into signed leases. And, coming into the new year, they might be saying, you know what? enough is enough. It's time for us to buy a place, start building some equity. At least those are some of the conversations I've been having with some people I've been talking to. So, if that carries forward, we could see those prices start to go up as well. I know we've already kind of seen them, like the inventory has been getting sopped up, and we're just kind of seeing a little bit of price action happening, but haven't really seen a whole lot. But, there's still a demand for housing more now than before, right? With rent going up as much as it did last year. So,
Yeah, I see what you see, where basically established renters leave renting to go purchase because they're irritated that their rent keeps going up. That normally makes demand at the bottom of the market, and we're still not seeing that, and it's because there's so many projects going on. We're seeing reverse condominium conversion. So in like 2006 and 2005, it was really normal here for somebody to buy an apartment building and subdivide it, almost like a land developer buys land and divides it up. And then they'd sell these buildings that used to be apartment buildings off as individual condos. They called them condo conversions. Now we're going reverse, where one buyer will make an offer through the management company to buy all of the condos in a building. I was just talking to somebody the other day that actually did this purchase, and then they turn it into apartment buildings. So we're seeing this change. We're also seeing a whole bunch of purpose-built rental, like big buildings with sales teams that are selling rentals downtown, or slinging rentals, like getting them leased out. So because of this, we're not seeing that same pressure that we will, but that's a limited time thing. This amount of development can't keep up. So we're probably going to see that shift driven by rent. The other thing that I'm excited about this year is probably some of the most beautiful inventory we've ever seen. We touched on this a little bit earlier when we were saying that wise sellers, established sellers, and some of the people that do the most amazing things to principal residences that they've owned over time, they don't come in crummy markets. They don't come to the market when it's not awesome. And it's awesome now. So Tony just saw something that even on a collector road was kind of a rare gem in Glen Allen. We've seen this in a few other places. So for those people that have those crown jewel houses, this year you will not have multiple offer situations with us. We'll have hostage situations. We know how to bring that extra special stuff to the market and make sure that people are dying to get it. So I think that we're going to see more of that inventory coming as this year progresses. Anything else that you guys think might be like an offset of what the statistics are saying? Okay. Well, then our general advice is that buyers, you're going to need some great guides. What you may not see is if you spend 6 months losing in multiple offers and then buy something, it's way less than what you would have got if you would have had a better plan right out of the gate. If the market's moving up, your time in the market matters. You want to find the stuff you want to buy it, and then you want to collect the money as the market goes up. So make sure you're working with people that understand multiple offer scenarios and how to win in competition. And you want to win by $1. This is like Price is Right. You want to win by the narrowest of option or of margins, and that's why you want to work with people that understand how to evaluate real estate. And then on the selling side, we have to make those buyers crazy. We have to make them scared of each other. We're doing that right now. We have a townhouse that's listed where buyers are terrified. That place looks like a nightclub. It's got a lineup up front. We got like a velvet rope and a bouncer. And that place on Monday is going to have a fistful of offers. But that's what we do here. We read the market and we take advantage. And if you're fishing with a rod right now as a listing, have you not heard about nets? Look at all these fish. How could you possibly keep up with the rod? There's different tactics and strategies. And if you're using the old ones, you're going to get worked. Anything else you guys want to add? Okay, folks, let's get our helmets and head into this market. It's going to be spicy. All right. Well, thanks for joining us. I really appreciate the people that reach out to me related to this. I'm glad that you guys find it interesting. If there's anything else that you want to see more of or less of, you let me know. We can't do less bald guys. We have a 50-50 split. It's like shirts and skins. But other requests we're open to. See ya.